Ever wondered how the accounting cycle works in a practical scenario? Well, imagine the world of numbers and calculations as an intriguing adventure, and we're about to embark on one with XYZ Mart, a retail company. So, buckle up. Firstly, the journey begins with identifying transactions. For instance, XYZ Mart purchases inventory worth $10,000 on credit from a supplier. This is an essential transaction that needs to be recorded. Next, we step into the realm of recording transactions. The aforementioned purchase of inventory on credit gets noted in the purchases journal. A debit of $10,000 to accounts payable is the result of this transaction. The adventure continues as we transition to posting transactions to the ledger. The $10,000 credit to accounts payable from the purchases journal makes its way to the accounts payable ledger. As our journey reaches the end of the accounting period, we find ourselves preparing the trial balance. XYZ Mart ensures that the total debits equal the total credits, achieving equilibrium in the world of numbers. But what if there are changes, you ask? Well, that's where adjusting entries come into play. Let's say XYZ Mart realizes it has $500 worth of inventory that has been used up. An adjusting entry is made to recognize the cost of goods sold, ensuring accuracy. Following the adjustments, we prepare an adjusted trial balance. This reflects the updated balances after the adjusting entry for the cost of goods sold. Our adventure doesn't stop there. Using the adjusted trial balance, XYZ Mart prepares financial statements, including the income statement, balance sheet, and statement of cash flows. As we near the end of our journey, we come across closing entries. At the end of the accounting period, temporary accounts like revenue and expenses are closed. For instance, if XYZ Mart earned $20,000 in revenue during the period, a closing entry is made for this revenue. After the closing entries are made, XYZ Mart prepares a post-closing trial balance to ensure that only permanent accounts remain open. And there we have it. We've completed our accounting cycle journey for this period, but remember, the cycle doesn't stop here. It starts over for the next accounting period, beginning with identifying new transactions. The adventure we embarked on with XYZ Mart demonstrates the practical application of the accounting cycle. It's a continuous journey of identifying transactions, recording them, posting to ledgers, preparing trial balances, making adjustments, preparing financial statements, and finally, closing entries at the end of the period. It's a cycle that keeps the financial world balanced and in check. And now you're ready for your own accounting adventure.